Welcome to this explainer. Have you ever actually stopped to think about the sheer amount of financial power sitting right there in your pocket? I mean, for decades, active trading was strictly confined to these massive desktop setups, multiple monitors, heavy, clunky terminals, the whole shebang. But today? Well, today we're going to explore how you can carry a fully functional global trading floor right in your pocket. We're talking about trading everything from Bitcoin to gold on the go. Let's dive into the actual setups, the concrete rules, and honestly, the very serious psychology you need to master mobile markets.
70%. Seriously, let that sink in for a second. According to recent market studies, over 70% of global retail traders are now using mobile apps to manage their investments. Think about that. The vast majority of everyday traders have completely shifted away from being chained to a desk. They're out there analyzing charts, executing trades, and managing their risk while commuting, traveling, or, just sitting on the couch. This isn't just some passing trend anymore. It's literally the new, definitive standard for how we access global financial markets.
So we are looking at a massive technological revolution here. It's quite literally financial freedom at your fingertips. You have 24/7 access to global markets from anywhere in the world as long as you've got an internet connection. But, and this is a really big but, here's the catch. With great accessibility comes great responsibility. Just because you can trade from a noisy coffee shop doesn't mean you should be trading everywhere without a rock-solid, highly technical plan.
Okay, let's dive into this roadmap. First, the mobile revolution. Second, charting and setups. Third, psychology and risks. Fourth, a real-world workflow. And finally, the final verdict.
Section 1. The Mobile Revolution. Trading on a phone requires distinctly different strategies, depending entirely on the asset class you're looking at. Take Bitcoin and crypto, for example. This is a 24/7, highly volatile market. The huge pro here is that your phone lets you capitalize on those crazy midnight breakouts. But the con? Well, obviously, you can't stare at a screen all night. So your mobile strategy absolutely has to utilize custom, real-time volatility alerts to physically notify you of major moves. Now contrast that with a commodity like gold. Gold operates on traditional market hours and acts as a macro inflation hedge, which means it heavily reacts to scheduled economic news like CPI data releases. You simply cannot treat a weekend Bitcoin chart the same way you treat a gold chart on a Tuesday morning. Your alert settings and how often you check your phone must adapt to that asset's specific rhythm.
Moving right along to Section 2, charting and setups.
So how do we actually execute clean trades on a small screen? Here is the exact step-by-step physical process for setting up a safe and effective mobile environment. Step 1. Choose the right app. You want platforms optimized for mobile that offer a sleek interface without totally cluttering your view. Step 2, and please, do not skip this. Secure your account with two-factor authentication. If your phone is your trading floor, you need bank-level security to protect your funds. Period. Step 3. Keep your charts flawlessly clean. On a 6-inch screen, you can't have 10 different indicators running. It just becomes an unreadable mess. Strip it right down to the basics. Use a single moving average to identify your trend, mark your key horizontal support and resistance levels, and just use pure price action and candlestick patterns for execution. And step 4, set custom market alerts. Seriously, let the app's servers do the heavy lifting so you aren't staring at a blank chart all day long.
To pull this off efficiently, you've got to master these specific mobile tools. And notice the heavy emphasis on automation here. You definitely want to use top-down trend analysis to get the big picture on those daily or weekly timeframes. But when it actually comes to execution, you absolutely must use automated stop-loss and take-profit orders. When you're entirely mobile, risk management takes on a whole new meaning. Think about it. You might lose cell service in an elevator, get an interrupting phone call, or suddenly have to board a flight mid-trade. Fixed stop-loss and take-profit orders act as your digital safety net. They entirely remove the need for you to actively babysit the position when the real world inevitably disrupts your connectivity.
All right, let's get into Section 3, psychology and risks.
We really have to talk about the #1 trap of mobile trading, overtrading. Because your phone is literally always in your pocket, that extreme convenience can very quickly mutate into a non-stop screen addiction. Let's be real, it is incredibly tempting to pull out your phone while you're hiding in the bathroom at work, see a tiny 5-minute price movement on Bitcoin, and just impulsively hit buy out of sheer boredom or a desire for action. While market volatility creates amazing opportunities, the constant access that mobile apps give us dramatically increases the risk of making emotional, rushed decisions.
Let's contrast two very different daily habits that emerge from phone usage. A disciplined trader uses alerts, heavily relies on fixed limits, and crucially, this is huge, they wait for the candle to actually close to confirm the setup before doing anything. Now, an impulse trader, conversely, is constantly unlocking their phone, rushing entries out of FOMO, and emotionally tapping the screen. Just imagine trying to trade a massive gold news spike while walking down a busy, loud street. The impulse trader panics, buys the absolute top of the wick, and gets stopped out seconds later when the price retraces. Your ultimate goal is to make the phone a tool for cold, calculated execution, not a slot machine for your emotions.
Let's see this in action in Section 4, Real-World Workflow.
Our sources actually detail a real-world scenario from trader Etienne Crete. He executed a 24-hour challenge trading strictly from his smartphone while traveling. Let's walk through his daily workflow. In the morning, he opens the app to briefly scroll through pairs, and he spots a clean setup on the AUD-USD based on daily support. But notice what he does in the afternoon. The entire afternoon is dedicated to one single thing, waiting for the candle to close. He isn't trading, he's hiking, traveling, living his life. It isn't until the evening, when the 4-hour candle firmly closes and the US session volatility kicks in, that he actually executes the trade. The absolute hardest part of the mobile workflow isn't figuring out how to tap buy. No, it's having the iron patience to put the phone back in your pocket.
The crucial takeaway here is so simple but so important. Patience pays. Let your custom alerts do the waiting. Do not stare emotionally at your phone screen, willing the price of gold or Bitcoin to move your way. It doesn't work. Set your support and resistance zones, turn on those push notifications, and put the device away. When the market reaches your designated zone, your phone will buzz. That right there is the true power of mobile trading done correctly.
And finally, Section 5, the final verdict. To summarize, mobile trading offers unparalleled freedom. It allows you to participate in global markets from crypto to commodities anytime, anywhere. But that freedom demands an incredible amount of psychological discipline to avoid the pitfalls of overtrading, screen addiction, and impulse entries. So I want to leave you with a provocative thought to reflect on today. Look at your own habits. Do you trade mostly from your mobile phone or a desktop setup? And more importantly, which environment actually gives you better, more disciplined results? Think about how you can optimize your own pocket trading floor. Thank you so much for joining me for this explainer, and keep learning.